Hello folks, this is Huskins, the Forex Mentor. Welcome to the daily review of March 27th. Oh, what an awesome day in the markets today. Another 20 pips added to our little kitty, and it just goes on. Wow, this month we've not even had one losing trade and just two break-even trades, and all the rest have been absolute winners. But that's a phenomenal month, and we're going to preview March 28th, your daily dose of events that shape the forex markets. First of all, happy Holi. Holi is a festival of color. It's an Indian festival, and I love to celebrate everything which brings happiness and joy. Life is a celebration of passionate colors. Happy Holi to all my friends who celebrate Holi, and happy, wonderful, colorful life to people who do not celebrate Holi. All right. The results for today, like I mentioned, we had a trade on the USD CAD. We entered right at these lows out here, and we exited right till the to the dot for a gain of about 20 pips. This was based on the average true range, and I've asked Rick to do a video on this, so you'll be guided by the video which would show the exact entries and exits. That's for the paid subscribers only, so go into the members only section. And in case you are wondering what my results are, what our results are, all you need to do is go to fxdesk.com results review site. If you want, I can take you there in just a moment. So all you need to do is go to current results review, and you'd see the results and the detailed results. So if you can see, for the month of March, trades taken 16, wins 14, and which brings up winning percentage to 88% and a loss percentage to 0. And all the trades, like the Canadian CPI, which is a reversal trade, we hit our target very easily. All right, so enough of gloating now. Let's come back to life. The important news for today was the Italian 10-year bond auction, which basically told us that there isn't anything much or um, out of the world going on in the European zone, even though with the Cyprus crisis. So the Italian bond auction was very much, the yield on the bonds were very much as expected, and the consumer price index from Canada. So let me just go through that. Now, the Canadian consumer price index for February 2013, the consumer price index, which is the CPI, rose 1.2 in the last 12 months, following a 0.5% growth in January. This 0.7 percentage point increase in the 12-month range was led by transportation prices, which rose 2% on a year-on-year basis in February. Now, one thing you need to bear in mind that transportation prices get reflected on all the rest subsequently. Okay, let me share with you the different components of the CPI. We have the CPI, the headline, then we have food, we have shelter, we have housing, operations, furnishing, clothing and footwear, transportation, health and personal care. See, then none of these categories get reflected in another category subsequently, apart from transportation. For example, if I see an increase in my movie tickets, that's my recreation, okay, or in my education costs, I'm not going to at once see an increase in the clothing and footwear. But once we have an increase in the transportation, then nearly all the rest will subsequently rise. So the worst thing to ever happen to CPI is an increase in transportation, because that's not supposed to be very good, because an increase in transportation will almost always spill out into the different sectors of the economy. Now, let's look at the 12-month percentage change. Now, this is the percentage change. If you see from 2008, we were going up, then the crisis happened, it went down, then it went up again, and here we are. Is this something to worry? I don't think so. So let us, whatever the headline might scream at you, it does not look out of the world right now. So just be calm. Do not It has not created a systematic shift in the Canadian dollar. Um, at the same time, I'd like to share with you that the CPI is amongst the absolutely most misunderstood topic. Most of the forex websites will tell you that higher CPI is good for the economy, but a higher CPI may be good for the economy only in um, certain circumstances. Good for the economy meaning good for the currency in question. In normal terms, it is basically depreciating the purchasing power of the money. Now, I'm a Canadian. If I have $1 in my pocket, uh, the CPI, if it increases, let's say by, I'm just going to give you an obscene number just to so that it makes sense. If a CPI increases by 100%, that means for me to put the same amount of food in the table, I will need $2 Canadian. I will. Is that a good thing? Definitely not. Of course, this will be hyperinflation, but it is not a good thing for us to have a higher CPI. It's just eroding the value, the purchasing power of the money. What economists tend to look at is that a higher CPI tends to push up what we call the interest rate. Now, if the interest rates go high, then people start investing in Canada because the money flows where it gets the best return. Now, uh, in this theory, there is just one problem, because money flows where it always gets the highest net return, not the highest return on interest. If I've lost you all out here, I would want you to read or watch my video on the CPI. It will make things absolutely easy to understand. And let us continue with today's review preview. Now, the Cyprus prepares to capital controls to prevent bank run. Both you and me and anybody who has um, you know any sense knows that the people in Cyprus would want to withdraw their money now, because they have no confidence in the banks. They would want to take their money home. But if everybody withdraws their money, there'll be a run on the Cyprus banks, and that's something which the uh, government cannot basically handle. So how do you do that? Prevent people from taking what's rightfully theirs by having a control. That's one thing. Another thing is that the Russian government says it will renegotiate a $2.5 billion loan made to Cyprus. Now, because of the latest, the way it has handled, Cyprus has handled the latest crisis, um, whereby a lot of Russian investors will be getting a haircut. Russia is not very happy with it. So now let us see what kind of a role Russia will play in pressurizing Cyprus, or getting back at them. Now, the BRICS finance ministers approve development bank. Basically, this is something like the IMF. Now, who are the BRICS nations? BRICS are Brazil, okay, Russia. See, look at this up right here. Okay, India, this country out here, China, and South Africa. Now, these are the fastest growing nations put together, and that's where the world is looking, in terms of growth and in terms of future. So now, currently, they rely on the World Bank. Now, who is the World Bank? World Bank is by the Western nations such as USA, Canada, Australia, the entire European zone. So they want to do something which is more in tune with what their own needs and wants are, and that's why they have agreed to an development bank. Now, all of this are subtle hints that uh, if something major were to happen, the world might be progressing towards a non-US dollar denominated world. Uh, and why would that make such a big impact on us currency traders? Because we'll have to change the fundamental way the US dollar is headed, and how uh, the other currencies are headed. Now, the Chinese economy could see major slowdown. That's what the Fed study finds. Now, the Fed study finds that China's aging population and declining productivity could dramatically slow down economic growth by 2030. Now, you need to understand that China made use of its population very well. It was one of the resources which it managed extremely well, but they put one child policy and to curb its population growth. Now, what has that that has led to an aging population which is not sustained by a young population, and that's not very good. So growth could ease out to about 6.85% from about 8%, and in the worst case scenario, the growth could drop below 1%. Now let's look at previewing tomorrow. Now this is the members only section, and like we said that we finished the trade for today. The Canadian GDP is a non-tradable event, but at 8:30 we will have US initial jobs claim. I think we'll be looking at that. Like I've mentioned out here, take a look at the results video, as more often than not they are as valuable as the original trade plan for expanding your understanding of the dynamics and the execution of the trade. So keep in mind that we have only one trade tomorrow at 8:30. Have a wonderful day and a wonderful life. Thank you. God bless you. Bye for now.